Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, November the 4th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, let's pick up with Bitcoin. As we talked about last week, Mr. Tucson, Ian, that if we were to go break our little support zone, we expected we would go on to make a new swing point low, and we'll probably dip down toward about 100,000. It's possible this is over here, but probability 75% chance we go down to about 1017, 70+% we go to about 100,000. I kind of talked about this last week. If we started to break back down and we could not break out, then we're likely going to come down and get a new low. Well, we got the new low. We definitely got that. But we may just see it dip down in here to see the reversal. There's a very important area for Bitcoin. Well, if you look at the bigger picture, if I could do it from the daily view, and we come from the recent swing point low up to the swing point high, the critical level is going to be around this 92,000, which is the 618, between that 9285 zone. That's off that recent pullback. And from that low, we went blasting off. So if we dip past and don't hold that 100,000 range, and we actually go a bit lower, this is going to be critical down here about that 0.618, which puts us about 92,000. But all is not lost on this. We kind of talked about Bitcoin would start topping out and moving based on the old scale of every 4 years, Bitcoin has a halving, and the halving we get 12 to 18 months of a push. And right now we're into the tail end of that 18 months. Now, this could push on and even go longer, but just looking at the technical picture, this really sets up a big blast off to the upside. If from this low to that high, we're dipping down in here, we can go blasting off. Or if we don't and we dip a little bit further, this would really set up, if we dip down here to say around 92 area, to hit that 618. That would set off the last like 5 wave that could blast us into, 170, 180. We talked about 150 to 170. So this would set up a really big bounce if we get that 618 type of retracement, big blast off, and that would start targeting our 150, 170 like we've been talking about. Now, if we start breaking below this and we start taking out that 92 and take out the 85 area, then this might be the top, right? And you start heading into crypto winter. And a lot of people talk about, you hear it, especially the analysts out there, well, since there's the ETFs and there's the crypto and now the governments and hedge funds and your pension plans all have Bitcoin with the ETFs and IBIT, et cetera, that we probably won't see the big crypto pullback. Well, I'm still expecting a pullback. It may not be to the 70, 80 plus 90%. Historically, that Bitcoin went into crypto winter, but I'm still looking for a very big pullback, right? So that's what we'll discuss later. But in the short term, be careful that we may see more of this dip. We did get a swing point low. It's possible it's over, but I still think the markets are going to correct a little bit deeper. And I still think this Bitcoin might correct a little bit deeper, dip down to that 100,000 area. Ideally, this would be, it says danger zone, but it's ideal if we dip down and hit that 618, and then you would take this swing point high. Let me clean some of this up. Let's just say this happens where we dip down in here and test that 618 right here. What is that? From the recent low up to the high. We come down and test it. If we do, then from this all-time high here to this test of the 618, we go pushing back above the 618. So you take that high to that low, you get your 618 level, and we start breaking above that. That sets the tone to reach up here into that 150, 170. So what does that mean? It doesn't mean we have to come all the way down to 92. We could reverse from here at this new swing point low. That is sufficient, right? That is sufficient for us to go blasting off. But just the FYI, if we do come down to around 92 area and we hit the 618 and blast off of that, then like I said, that high to this low, we get a break above a 618, that really sets very bullish movement for another blast into the stratosphere. So I'm watching that closely. But Emil's spot on. I talked about this. I said I would not be surprised to see Bitcoin give us another new swing point low. We got it. The question is, do we dip one more time under that 100,000? That's going to be a critical psychological point. And I think a lot of people are short there, meaning they're going to cut and run on there, that if we get down here, they're going to say, uh-oh, I'm getting out. That's the end. And I would not be surprised to see if we do dip below 100,000 and hits a lot of those stops, that price comes down here, potentially testing that 618 right here. Sorry, not that far, toward that 92 level. And I would think it would be a very quick reversal. So what am I trying to tell you with Bitcoin? Bitcoin did exactly like we had discussed. That more than likely we need to come down here. Would not be surprised to see if the big dogs kind of push price to 100,000, make everybody nervous. The small traders in here, there's a lot of people are going to bail at 100,000. And if that happens, we could see this go dipping down, test that 618 off the bigger move, and then that sets off a massive blast. Well, what this could do, based on this correction and grinding, depends how fast, but we might be pushing into 2026 before this is over. So what would change is 12 to 18 months historically, the last 3 Bitcoin halvings, it pretty much played out and it was over. If this plays out and we get the technical bounce and we do go blasting off, this thing will probably push us into 2026. Being we're already in November, anything's possible. Bitcoin could just go on a wild tear, come down here, dip in a matter of a day or whatever, and then go blasting off in the next handful of weeks before year end. But this could also grind through in a 5-wave type of move that could push us into maybe first quarter of 26. All right. I wanted to start off with Bitcoin because I know a lot of people get nervous when, Bitcoin's it was just a minute ago, it was up here at 126. Now it's down 104. We dipped down this morning to 102. So this is what we're expecting because we didn't break that 618 to the upside. And I warned you that, hey, if we didn't do that, we're definitely going to likely go on and make a new swing point low yet again. And that's what we got so far. All right, so I'm not doom and gloom on Bitcoin by any stretch of the imagination. I just wanted to make you prepared for this. And certainly that based on where we are, would not be surprised to see one more flush down here. And as the flush, we reached 100, we don't go ripping off from that. And we start dipping below that where people bail on their position. This thing would likely maybe even dip down here. And again, where that level comes from is the swing point low up to the current swing point high. And that would put us right around that 92,000. So it could be a very quick dip and reversal out of there. And that is very bullish price action. You get a big move up, you get a 618 retracement. That sets off the extensions to the upside, and that could set off that big blast, still reaching our 150 to 170 targets. All right? All righty then. How about that? Played out exactly as we discussed. What about ES? Man, did I warn everybody about this last week, and then some. Go back to the 15-minute, and we talked about the need for ES to go back and fill that gap fill, right? We kind of hit the gap fill, and then we kind of just kept grinding higher. We did get a dip towards it, and I said, typically, we need to fill this gap fill. Well, we tested it, started to fill some of it, and tested it again, filled a little bit more, tested it a third time, still didn't quite finish it till down here. Now we, fulfilled that. So what if we start to find that the gap fill has been filled? Does that mean we have to go blasting off to new highs just yet? I still feel there's a gut feeling, that is, that there's probably still a little bit more downside. And this fits that bigger picture we discussed a few weeks ago. Let me go back to the daily, where I talked about this kind of yo-yo move that we would go up, come down, and we originally did the dip. We went up to the target. We exceeded it by a little bit. And then I kind of anticipated we were going to get this type of move before we're done, and we get a much bigger type of correction. And so far, we did blast off a little bit beyond where we thought. And I kept saying, be careful. We still need, after that gap up, we need to fill the gap. Well, we've done that. And we looked at several parameters that we discussed it with it. And I'm going to review those again. But as we dipped down into that, it was like, wait a minute. This is interesting that we fill the gap. Now, could we go blasting off? Sure. It's possible that was enough. And then we go blasting off. But I still think there's a little bit more downside. This would be ideal that we get a little bit more downside first, then we go blasting off into the end of the year, maybe into first quarter, somewhere out in the 26th to fulfill this move. But I'm not convinced that that is the swing point low and we're absolutely done. Maybe. Because first thing had to be done was fill the gap fill. We've done that. Now let's see if that holds. Now, why am I even bringing up why this may not be the end? Because it fits the script. We were going to go up, we were going to come down, and then we were going to go up, right? Well, this could be it, where we just exceeded how high we were going to go. And by exceeding how high we were going to go, this pullback would have been here if we'd have stopped there, right? Take off what we blew off on the top here. That little zone up here, you take that off, add it to this bottom, and that would put us right where we expected. So this could have been the push, retracement, last push. Well, we exceeded that. Is this the end, or we still come down here? Well, again, I'm questioning this current swing point low. And why is that? You come over here to our charts, and we look at the heat map. And I said, I thought that these lower ones, like the 5, the 20, and the 50, really needed to push, say, 20 and lower to set up the market recirculating and getting another push higher to have that blow off top, right? So We looked at a few of these, the 30, right here, 20-day, how many companies above the 20-day moving average of the 500 S&P companies. And we discussed this, and I don't know what happened to my 80s. Let's see, am I signed in? Yeah, I must be signed in. Well, anyway, let me just do this real fast. We got our 80 rule up here, and we have our 20 rule down there. And the last place we touched up here on the 50-day moving average, and this is a 20, sorry, 20, was we touched a few times up on the upper end. We touched down here. It's an oscillator. So those of you that never seen this before, we oscillate between the two levels. And this is on a much higher time frame. So we come down to like a daily. You can see it a little bit easier. More price movement in here. But the last time we touched over here, we came close. We got a lower high. We're likely needing to come down and touch this. So if you compress this, let me do that and compress this a little bit more. Let me go a little bit higher than that daily. Let's go to a weekly. And a little bit more price action. That'll help you see it a little bit better. All right, here we go. So the last thing we touched was overbought. Prior to that, we were oversold, went to overbought. Really haven't touched oversold yet after multiple touches here. This is why I still think there's more downside in ES and NASDAQ. They look the same, that we need this to push lower. And we continue this process. That's the 20-day. You look at the 50-day right here. It's very similar. So how many companies of the S&P 500 are currently above their 50-day moving average? And this too is very similar. So I'm going to compress this a little bit so we can see that the last place we touched a few times was this overbought zone. And we were likely going to come down here and get this to oversold to set up the next run toward new highs. So that's why I don't think this current ES price or SPX, etc., it would, depending on how you trade, SPY, that I don't think we're quite finished to the downside, because I really would like to see these get to oversold to reach 20 and lower. And this is typically what it does. You get to oversold, you go to overbought, you get to oversold, you go to overbought, and this fits the script. So the 20, the 50, let's push those to oversold, get a little bit more market push. Then when these guys are oversold at 20 and lower, we then get a push back to 80 and 90, and it allows our 200. This one is the opposite. The last place we touched on that was oversold, and we haven't touched overbought recently. So this is more likely we need to go up here. So if I put all things perfectly together, Mr. Tucson, Ian, James, that would be for the 20-day, 50-day push lower toward their 20s, while this 200 maybe dips a little bit lower. I kind of sit somewhere around 50, 40 area. As those push to 20 and lower, this one pushes down to 50/40 area. And then we get that blow off top going into the end of the year, maybe first quarter next year. And when we see that, my 20 dips to 20 and below, my 50-day, 20 and below, then it reverses and gets up to 80 and higher, forcing this to dip and then get up to 80, 90 and higher. Then I think that sets the tone for the big correction that's still to come. Fair enough? So when you do this not only for ES, but you also do it for NASDAQ, it looks very similar. And I love this bar chart heat map where you can look at all the markets, and we simply come down and Russell is one that doesn't quite follow the 80-20 rule as the ES, NASDAQ, and Dow does, but it shows more weakness we've been having in ES that we haven't had in the Dow, the S&P, and the NASDAQ. But the same thing. You come over here to the 20-day and then the 50-day, just like I did with ES, and those look identical, where the last place we touched was overbought, so we're likely need to still come down on those lower ones. And then on the higher one, which would be the 200 over here, we're just going to get a dip, which the last place we touched for that was at extremes. So we're likely going to get this dip. Down here is the last place we touched, and I'll compress that. We got close to the 80 range and higher, but we didn't get it, and we just been kind of chopping sideways to lower. But this would fit idea. We get a little bit more downside market, then we get the blow off top, and this dips to maybe 50 area. I don't know if we're going to get quite to 40 on this one because it's holding up a little bit stronger, but somewhere in that 50 to 40 area. And then we go blasting off back to 80, 90, and that would set the tone that the markets are getting ready for the big, Elizabeth, I'm coming to join you, honey, right? So this is why when I look at these, and you just look at the heat map in general, I wanted to see these get down 20 and lower. Well, Dow's starting to do it on the 5. NASDAQ is getting close, and we want to see these go a little bit lower. Russell, and then the Dow up here, S&P, all this up here. We're getting closer and closer to that zone. So this is why I think there's still a little bit more downside likely still to play out. And then when these get over my 20, my 50-day are at 20 and lower area, that's when it's a good time for the market to bottom, reverse, push this number up toward that 80, 90 area, and we get that blow off top. Fair enough? We can do the exact same thing with the Dow Jones, and you come up here under Dow, and you do the same thing. You do the 20-day. It looks very similar. Where was the last place we touched? Was several times over here. We didn't quite touch below. So you can see once we got down here, we did get up here multiple times, dip, touch, dip, touch, dip, touch. So we really haven't pushed this to that limit. That's why I think we're probably still going to get a little bit more downside to get these lower time frames, which means the 50, how many companies in the Dow Jones above their 50-day moving average. We want to see that push to 20 and lower, then get the big reversal. And that would be the same as we've been talking about, the same process, that these lower time frames, and I call them time frames, I'm so used to time frame, but the 20-day moving average, the 50-day moving average start pushing closer to oversold. And then we get the blow off top going into the end of the year, maybe first quarter. This will dip a little bit, and then it'll go blasting off. And even the 200 has not seen that level. And, well, this Dow actually did go up and touch that one. So we may get a little bit more, but I would expect we get another double top on this one. So the Dow is a little bit different. Let me make sure I got the right one. Yep, Dow. It did actually touch a few times. So maybe we do need a little bit more downside, and then we get the big push. Fair enough? So let's go back to price action. Is this the end? We're getting a nice little reversal. They're buying the dips. It may be over, and we don't quite see it, but I'd be very careful. We've seen these bounces, and they didn't quite hold. So let's see if that can break out. So what do we do on this scenario? We have to go from the recent high, and I'm going to stretch this out to give us some room to deal with. And we look at this recent reversal, looks good, but we still need to use our 2-point tool to kind of give us an idea from the recent high down to the low. Are we going to break this resistance zone If we don't, and we hold below this resistance zone, then we're likely going to see maybe, could that be the A, B, C, and it's over and we do go blasting off? Yeah. I won't say it's absolutely not. I did make a strong statement that we need to gap fill at least. And if the gap fill doesn't hold, then we could probably go lower. Personally, I'd like to see a bigger dip for personal reasons. I like to see a bigger dip first because if we get it, it has to bounce and go that much higher to get to the new targets, right? That's a nice little move. It was, nice move. Is it over? I would definitely be in a position of authority if you're scalping this and you're thinking that this is going to go blasting off to those new highs. You're 100% correct. It's going to go blasting off up here. The question is, do we rally, fail, and still come lower before we get there? Or is this just going to be a big reversal now? Be careful. The gap fill was the first step. That's been met. Not a shock that it's bouncing a little bit. And not only do I look at the parameters, but when you go and look at the software and you start thinking about, well, are we where we need to be on S&P? Weekly's overbought. We're starting to depressurize. That's a monthly, sorry. Weekly's overbought. No, that is a weekly. Weekly's overbought. My daily started to turn over. We got the hook, we got the cross, we got the slope, we got the angle separation. That typically means what? The 4 hour is going to cycle down. The 4 hour did cycle down. So this is why we love this software, right, Mr. Tucson? On a daily PAI hooks and crosses, you get slope angle separation. What happens? The lower time frame cycles. Notice it wasn't just the red line, the green, it was all three, and the trend momentum. So the question is this bounce going to go to break out to new highs? I'm still not convinced just yet because of that barometers we were looking at. This would fit a much better picture if we can get this to decline a little deeper to push to where it's oversold to set up a nice bounce. Now, all I can say is, what if we extrapolate that and I see this bounce here kind of fizzle and we push lower? We come down to this zone, which is where we originally were looking for, somewhere around the original low to high, about a 618 type of retracement to set up the blow off top. So this was the dip, this was the rip, and we would come down somewhere around a 618 retracement to set up then the extension going higher and pushing us up there. I'm still thinking it's going to play out. Amen. And what happens if we get down here and that doesn't hold? Then we'll come down here to the Magic Fibo, which is kind of off the screen right there. This orangey line. So I thought we'd get here to go bouncing. That might be it, but I'm not convinced. All I can say is if you're buying and you're scalping this based on a 4 hour PAI hook, good for you. Congratulations. Just be in a position of authority, right? Because this bounce off of that 4 hour is great, but you need to be in a position of authority because what can happen while the daily's still heading lower, slingshot lower, this will kind of push up and then push lower, and we'll get yet another lower high, lower low, and that could get us to those barometers we just looked at. Companies above the 50-day, below the 50-day, how many above, etc. Start pushing to that 20 and lower and set up the tone for a deeper retracement, letting the daily depressurize further. And I would even like to see, this would be great, if we can get another, say, week, this week, maybe we just push lower and then we reverse. But it probably may not give us that much time of pushing lower, and we end up slingshotting higher again. We've been in a slingshot palooza over and over and over and over. But the key is with the software, we did get that daily PAI hook, trend momentum cross we talked about last week. And we said if we got that, we would expect this to definitely fill the gap fill. That part has been had. When I add to it our parameters over here, not quite reaching oversold where the last time was overbought multiple times, we typically need to visit that, and that would be ideal, conducive to a little bit more downside coming down around the 6700 area would be ideal, maybe as low as that 65, 67, 65 area. That would be tremendous if we could get it. Then I would look to go long and a blast off for this thing to go up hundreds of points as we push toward the end of the year. Amen? So be careful. I see it's a big, rejection wick here, intraday rejection wick. We were down much bigger. Now we're only down about 40 points, but we still have to take out the resistance zone, and that's still quite the run. So if this is the end, Emil, we're going to see this close back above 6,900. Then we can go long and shoot for 69.70, 69.90 area. That would be the targets. Otherwise, this will probably fizzle, drift a little bit lower, allow that 4 hour to continue to slingshot lower, allow the daily to depressurize further. And then when we get down here, I would look for a big reversal. All right, so to the upside, if this is the end and all we needed to do was fill the gap fill, which is possible, then I want to see price break above this resistance zone. If we get a daily candle body above that 6,900, then I would say yes, go long and shoot for 70 to 90 plus points. I remember people in ENS die and go to heaven on 1 or 2 points. Well, this is extremely high probability trade. We close above 69. We're going to 69.70. We're going to 69.90. Amen? Otherwise, we don't break this out. We take this swing point low out. Where are we going to go? Down here to that 618 retracement, which is the recent low to the most recent high. Beautiful 618 retracement, somewhere around that 6,700 area would be ideal. Okay? 67 to 65, 67, 66 area where my circle is. That's what I'd love to see. And then when we get down in here, what am I going to do? Look to go long and shoot for several hundred points back up. All right. What about NASDAQ? Kind of the same. It's dipping. Is this the end? I'm not convinced. That could be a little ABC, three-wave move, and it is over, and we're going blasting off. But again, we showed you the barometers over here, and back to the NASDAQ. It just doesn't feel quite like it should be finished because the 20-day did touch extremes last time without touching oversold. So it's possible we need this to push back down and dip. Then we can, because we came close here down in the upper 20s. I would be surprised to see us come back down to the upper 20s, even 20 or lower. All I know is, Emil, if the NASDAQ continues to pull back, ES continues to pull back to the target zone we're giving you, and I see this anywhere near 20 and lower, that's a sign it's time to buy the dip. Amen? That's what we're going to be looking for. And then the blow off top, we got signs and symptoms for when we feel it's very scary times. We're ready for a big pullback. The Oracle of Omaha, Mr. Warren Buffett, just sold since 2022 $184 billion of his stocks. And he's loading up on cash money. And he has another total cash pile of $384 billion with something like 23 billion in treasuries. So I think he's looking for that everybody's just, it's going to the moon, Alice. He's going to cash and looking for the big pullback. And then he's going to have those 400 billion in cash available to buy some bargain and, major bargains when we do get that big pullback. Amen. So that's just another food for thought that I still think we're going to dip and rip. But once we get the signs that the 200 moving average is at 80, 90% across the board, we went through several steps, not only ES and NASDAQ, but we talked about the Russell, that it too is likely going to get to that 2600, 2700 before this is done, get the blow off top. And then when we see all of that, NASDAQ at blow off top, Dow at blow off top, ES at blow off top, this Russell up here at 2600, maybe 2700, that is when we look and we see those how many the companies above their 50-day 200 moving average. When all of those are at 80 and above, then it's time to call it and be set up for a big massive pullback. That's what I'm going to term, Elizabeth, I'm coming to join you, honey. So it's not doom and gloom. This pullback is probably going to, well, this one could be finished. We could end up with the low, the high, the higher low, and still go blasting. So up and until we see all of these in their upper quadrants, we see these when we go back to the heat map. And what are we going to be looking for when it's time to be in a position for the markets to go tumbling? When these 200 moving averages are 80 and above, you go down to Russell. I don't think we're going to quite get to 80 and above, but this one typically doesn't follow suit because it's been much weaker. But again, the Dow, when it's at 80 and above, and then the NASDAQ is at 80 and above, we're looking at the 200. How many companies above the 200 moving average of these indexes? So when we're at 80% of those companies are higher, 80% of those companies are higher for the NASDAQ, for the Dow, for S&P 500, right? When all of those are there, then we're going to look for the timing for us to start exiting and be in Warren Buffett's shoes where we have a lot of gunpowder in storage and be available to buy some major bargains that are going to come from the Elizabeth, I'm coming to join you, honey. Got it? So what is it? I do think we're still going to see the dip and the rip. Is this the dip and we're about to rip? Maybe. But we got to get above this before we get ahead of ourselves. So I would not be surprised to see those lower time frames, the 20, how many companies above the 20-day moving average, the 50-day moving average, push to 20% lower, setting the tone on a bigger dip, then sets up the rip. And then when we're up in the stratosphere up here and we see those 200 moving averages across the board are at 80 and above, and we're up here at all-time new highs again, it's time to set the tone to put in some insurance policies. And then the NASDAQ, not convinced this is the bottom reversal yet. We didn't quite fulfill the gap. It's not as, well, it doesn't mean that the NASDAQ always has to fill its gap fill like ES. ES is the one I use. NASDAQ does follow suit. This one is in the middle of the gap fill so far on that low, but I still don't think it's finished. So maybe we do end up filling the gap fill on the NASDAQ as well before it's over. But again, I do look for, if this is the end, we go blasting off, or we dip further, which I'm leaning more towards, and we then go blasting, then it sets the tone. But with NASDAQ, you got to do the same. If you're a scalper and you're thinking the NASDAQ is ready to go blasting off, be careful. I'd be in a position of authority because when you go from the high to the current low, we have the same issue. We're not above that 618786 retracement zone. So what if this reversal continues and we start closing above, say, 26,200? Then we could shoot for 26,500, 26,600, maybe 26,800. I do think we're going to go higher, but I'm not convinced that this pullback is enough yet. And I like to see more to then buy and shoot for a much bigger move, talking 1,000, 1,500 kind of points or more if we can dip down into this area. But that was the plan. Going back a few weeks ago when on this dip, I said we should go ripping higher, stop somewhere around here, then pull back to here, then go there. Well, we exceeded it, and now we're getting the pullback. So maybe we just slot this over and move our targets a little bit and say, well, we're just a little bit under on that, and this could maybe go up. I'm going to leave it where it is until price is finally done. But like I showed you earlier, what we blew past the original target, if we cut that off and add it to this swing point low, we would definitely be here, right? If we'd have stopped where we were thinking and then we pull back to where we're thinking, we'd be right there right now because of the overshot. So is this over? I'm not convinced until we close above that 26,250 area. You close above that, then shoot for 250, 300 plus points, even 500 points pushing higher. Got it? So I do think the dip, questionable. You need to put a big question mark here, even though you look at that kind of price action, big question mark, because you look at that and say, well, that's definitely a reversal candle. Man, that's going to the moon. We're ready to go blasting off. Maybe. But I would like to see a bigger dip first, then salivate country to get that blow off top. And we kind of look at the software as well. Always the software's in the mix, but this is looking at the NASDAQ. Same type of thing. We got the daily hook cross, steep slope, angle separation right there. Red, blue, and green hooked. Nice steep slope. We got green below the red. That's the cross. That's the trend momentum cross. So we got the PAI hook, trend momentum cross. We got slope. We got some angle separation. That says what? That's a daily time frame. If a daily hook and a cross equals a 4-hour cycling down. Look at it. Can't make this stuff up. Well, is this over? I'm not convinced. So if you bought this little bounce, be in a position of authority, because I would not be surprised, see this push lower, do a little slingshot lower, allowing the daily to go ahead and depressurize further and push further down. Amen? So what happens if we get the full daily cycle down? And let's just kind of push our calendar out a little bit and say, well, this is going to push down, and we do it over the next couple of weeks, and we push through mid-November / third week or so of November, and then we get a daily. All I can say is, if this baby sucks down that far, and we get a daily cycle down and it hooks, salivate country to buy that to go long, big time. But we may not get this daily to cycle all the way down. So back over to the charting platform, what are we looking for? I was looking for a little bit deeper retracement. Where does that come from? That comes from the recent swing point low up to the current swing point high. Let me move some of these and move a little bit of this out of the way so I can see that swing point high. And we'd love for this to come down somewhere around that 25, where we get our 618786 retracement zone. And let me take some of these off real quick because I have so many, just to give you a clean, pristine picture. I'm going to remove it, and then give you a fresh one. So what are we looking for? If this little zone, the gap field, holds, and then we continue lower, it doesn't hold here, and we go lower, then I'm looking for that 618 type of retracement from the high to the low. That puts us right around my little box there, somewhere around that 25,000. Amen. So could we get this to fizzle just a little bit and come down here? That would be ideal. That would be ideal to set up the blow off top, pushing us into the upper 26,000 or even higher. This thing could extend, and this could even dip below. So the little original target, we blew past it. This thing, we could actually blow past it on the downside and even blow past it on the upside. But based on those barometers and how many of their 20-day, 50-day moving averages, I think we need a little bit more downside. And as we do get that, and I see the 20-day, the 50-day moving averages at 20 and lower, that would set the tone for us to then go long and get that blow off top. I do not think this is the end of the run, where that's it, folks. We're not going any higher. And Elizabeth, I'm coming to join you, honey, is going to kick in, and we're going to get a massive decline. I don't think that's here yet. I still think we're going to get all-time highs, but I do think likely this little bounce is going to fizzle and allow us to push a little further. Amen? All righty. So that's what we're looking for. IWM, a little bit different. We're already there from the recent high to low. We're already in that zone. We passed it. So is it possible this could hold at a higher low and this baby starts breaking out ahead of time? Maybe. Or if we break below this green box that we've tested a couple of times, then look for us to go make a new low. Then we can get that still blow off top where we're looking for. In an IWM's case, it's that 256 up to 265. On our Russell itself, we're talking the 2600 slash 2700. Got it? So from the recent high to low, we expect we're going to go up here before it's done. And once we get all of them, we get Russell up here at 2600, 2700. We get the Dow up in its 50,000 or higher. We get S&P up at that 68, 69 and higher, maybe even 7,000 or higher. And then we get all three of those there. And one last one I like to see, and that is the equal weighted S&P, RSP, the equal weighted ETF. I'd like to see that get up here into that 190, 198 zone. And then that would be perfect timing. All I can say is, Emil, what if, in honor of William Bruce, what if we get this to push up in here, we get ES to do it, NASDAQ to do it, Russell get up in its target zone, and we go to our barometers, and all of these guys, S&P 200 is at 80 or higher. We come down here into the Russell. It's up near there. We come down, more importantly, would be the Dow is up at 80 and higher, and the NASDAQ is up at 80 and higher. When we're in that blow-off top zone I'm giving you, that is the time and perfect scenario to where, look out. You need to be loading up on some kind of insurance policy or shifting to cash and putting it on the side, waiting for the big market to correct, and then we'll get some opportunities thereafter like Warren's doing. I mean, the man has been successful, and when he's bailing on all his investments when the markets are still ripping higher, that tells you something. And I agree with it. Elizabeth, I'm coming to join you, honey. And when that all comes to pass, you need to have a plan of action. And I'll be here to guide you. That's part of my job. Can't tell you what to do, but I can tell you what the plan of action is as far as what I'm going to do. And that is when these babies start popping into this zone, IWM pops into that 256 to 265 area. NASDAQ is up here in that 26, upper 26s or higher. So I extended it. Big circle up here where I thought it would top and reverse. We're already there, but I'm telling you right now, this isn't the end. This goes back years ago. This was the target. Well, I don't think this is the end yet. I still think there's some more coming, but you know what to look for. And the Dow, we need to see above 50,000. That would be good. And then our global liquidity just missed 53,000. I wanted to get up there, just missed it. And now we're pulling back a little bit. Well, I don't think that's the end either. We'll get a pullback and another push. But these are the things I look forward to. And the software is going to be in a position of authority because once we get the dip and the rip, what do we see across the board? All of them are going to be at extremely overbought condition. Monthlies, weeklies, dailies. And that sets up the Elizabeth, I'm coming to join you, honey. And how do we know it's underway? Last time we had a full cycle, right? When was the last time we had a full cycle? That goes all the way back to the 2007 financial crisis. And it looks like a flat line. If that was your EKG there, doctors would be calling you because it looks flat there because of this big run. But back in the day, it was a significant pullback. But this was, look, full cycle. Since then, we've been slingshotting for decades. And even with COVID in 2022, etc., we got our trend momentum to do it, but notice money flow right there. It never made a full cycle. So this Elizabeth, I'm coming to join you, honey. Next financial crisis, I'm looking for the full cycle like we did in 2007. And I'm looking for a big, massive pullback somewhere in the nature of the Magic Fibos, if not even lower. Big, substantial correction. Got it? And that's what we're going to see on the software. So, Emil, when do I become interested and starting to nibble on some of these bargain basement prices? When the PAI and the trend momentum on a monthly gets extremely oversold into this category, then you can start to nibble. Right? That's the plan, my vision. I don't predict. That's for the prophets. I anticipate with the best of them. But that is the plan. How do I know it's finished? It doesn't matter how much it drops. I want to see this cycle down, cycle down. Amen? And then even if we don't get a full cycle and we're disappointed, kind of like we did in 22, we got the trend momentums to cycle, but the PAI didn't quite cycle all the way. Well, there's signs and symptoms after the fact of a bottom reversal, and then we could take it from there to start nibbling. But I'd really love to see the big full cycle. And when that happens and I get my PAI to hook, that is certainly the time to start adding back to the positions and look for the next big surge as we go into the 2030s. All right? So any questions? The plan is for these to dip then rip. No surprise. I talked about it right here. Expect markets to move lower, then bounce. Right there. That was last week. So is this the lower already and we're starting to bounce already? I'm not so sure, as I've been saying all morning. I think we need one more push. Allow the 20-day moving average, 50-day moving average to get to 20 and lower. So what are we talking about? For those joining late, you go back to your heat map, and we want to see on S&P, we want to see the 20 and the 50 push toward the 20s, push lower. And then we want to see the Russell push toward the 20s and the Dow push toward the 20s. Then we'll look for an opportunity for this to then push back up. And then our 200, when we start to get the all-time highs, and ES is where it's supposed to be, NASDAQ, Dow's at 50 and higher, et cetera, et cetera. And then we start to see their 200 moving averages start to push 80 and higher. Then it's time to be in a position of authority and expect the markets. And Elizabeth, I'm coming to join you, honey. But this is kind of what I was talking about last week. We needed the gap fill. We got that. Is it over? Not convinced it's over yet, but I definitely expect a bounce. And the bounce is to target what? We come back toward our target zones, and we're going to look for, like I said here on ES right now, from the high to the low. And again, I don't think that's the low yet. I think it's going to go lower. But if I'm wrong and we start closing above that 6,900, then we go long and shoot for 6,970, 6,990, and 7,000. Amen. To the downside, I still think would be from the recent low to that high. Love to see it start pushing toward that 6,700 would be ideal. Somewhere in that 67, basically a 618, 786 retracement zone. This green box where my target zone was, out of the plan. Love to see it come down here and then do what? Buy the dip and look for the rip. Got it? NASDAQ, pretty much the same. I don't think this dip is over. Likely going to push lower. What is that going to look like? Go back to bar chart, go back to the heat map, and look for these to push towards, right there, push towards 20. Maybe this one push a little bit lower towards that 20. NASDAQ's a little bit higher on the 50 because it's been on a rip. But we need this to cool off further before then we go ripping and this goes up to 80 and 90. So that's what I'm looking for, right, Mr. Tucson? We got the plan. All I can say is on the bounce, be in a position of authority because I do think we're still going to go lower. And we haven't quite filled the gap fill. This isn't as important as it is on ES, but I would not be surprised to see, since ES has done it, NASDAQ follows suit, and we get basically from the low to the high, we get that 618, 786 retracement zone, which is here, update at the current price. So we come somewhere around this area, 50% to 618, maybe as deep as the 786, but I'd like to see kind of go down another 700 points or so, come toward 25,000, and that would be a good buying opportunity for us to then go up well over 1,000, maybe 2,000 points or so as we get that blow off top. I think I've ad nauseum completed that, but one last thing was the RSP. So I'm throwing all that in the mix, and notice this is probably going to come down and give it a little bounce off of our Magic Fibo, but I want to see this guy go up here to its target, which is this 194, 198 zone. So when all of them are up there, Dow is at 50,000 and higher, ES is up at, say, pushing 7,000 or higher, NASDAQ is up at that upper 20, say, pushing 27,000, 26.8, 27,000 or higher. Dow is up at 50,000 or higher. This guy bounces it up in this zone. And those barometers over here are pushing 80 and higher. All that together means look out. Look out below. And it could be down goes Frazier. Down goes Frazier. And a big knockout. So it's coming. It's a matter of time, not if, but when. And it looks like this dip may continue a little bit more. Then we get the rip, and we see this baby at 80 and 90 or higher, 80 certainly or higher. Then I start to be in a position to go to dry powder, have cash on hand for the next bargain hunt, and even do some put spreads to the downside, some inverse ETFs, many ways to play the short side of that market, some VIX type of trades, UVXY, some of the other ones on expecting when it's going to go spiking, etc. So yeah, be careful. All right. All righty. Let's continue. What about the dollar index? It's up into its target zone. Wasn't surprised that it reached up here from the recent high to low. We broke the 618. You typically go make a run toward the 1448, 1272. Is this the end? Is this the bottom reversal? Too early to call. This was more or less expected. And we said if we get this to blast off, retrace, hold the 618, bounce, and start breaking above 102, where all the shorts are sitting, we may be seeing the bottom reversal. So it's way too early to call the dollar index bottomed and reversed, and we're going breaking out to new highs, because remember, the bigger picture is not just as to bounce a little bit here that, oh, it must be the end of the move. Not necessarily, because you go out to like the weekly chart and you get the bigger move, and that bigger move, look where the critical levels are going to be from that recent swing point high down to this swing point low. We got our 618 up here around that 104 to 107 level. That's what this big pink box is up there. I'll move this one out of the way so we call our attention to the more important one. This out of the way. So this is the more important one. So, you know, what might we be doing here? Well, we could push above the daily Magic Fibo, but we could do what? Just rally a little bit, make a move toward that 102 and get spanked. We got our Magic Fibo up here below 102. And maybe we're testing that. Look at how we were doing this before. We'd test the weekly, we'd bounce, we'd test it. We did break below just for a temporary moment, and we blasted off to make that high. And then we broke down, and we haven't retested since that latest breakdown. So maybe this is price action just doing a weekly type of retracement to still push. So even if we do, because we broke above on the daily, Emil does not mean we're ready to go blasting off. We have to blast off and get above this 105 area, and then 107. We close above 107 on a daily, weekly, whatever time frame we're on. We got a candle body above that. Then it's game on to go to 112, 114, onward and upward we go. So even though this bounce, I'm looking for still a push lower. We may get a little bit more, but be careful. I would not assume that this is definitely the bottom reversal and it's over. Well, the bigger picture, as we've been showing you this forever and a day, for years now, is this picture here, and that is your wave 2 correction. We expected it. We called it well over 3 years ago, saying we were going to get a big reversal down in a wave 2. I still don't think this is the end. It's way too early to call this is done and we're ready to go breaking out. But I'd be remiss if I didn't tell you at some point the wave 2 will end. This is the target down here around 80 we called for multiple years ago, over 3+ years ago. This was put on the chart. And is this over? Well, at some point it's going to stop here or somewhere in between. And then what happens? We then go breaking to new highs. Is this it? I guess you could say maybe. It's still not a high probability yet. When does it become a higher probability? We got to get above that 105, 107. So basically from that high to this low, we got to break the 618 zone to set the tone for extensions, which push us back up near the all-time high, not all-time high, but this most recent high back in 2022, right there. So we're got a long way to prove it, just like that one tested this zone. And I told you even then, during that big rip higher, I don't see this thing breaking out. I see us making another low. Well, same thing. We got to go breaking the magical level up here. Now we have a high and a new low. We got to go breaking it before we start anticipating, yeah, this thing is done. Stick a fork in him. We're definitely going breaking new highs. That would be a correct statement, but I don't think this is it. I still think it's going to go lower, but hey, that's how we play it. One day at a time, one trade at a time. So, Emil, is this likely to go a little bit more? Well, look at the software. It expected this, right? The daily cycling up. I'm still looking to sell the rally off of the daily. When the daily PAI hooks down, I'm going to sell that and get to a position of authority. Amen? That's the plan. So how much higher could this go? It could chop some more, but when I see this PAI hook, that's the point where I'm going to look for this to go down, the euro dollar to go up, the pound dollar to bounce. And when that happens, we're going to get to a position of authority, whether I'm trading the euro dollar long and I get to a position of authority, because what can happen? This thing could turn down and cycle, certainly. And this could be the beginning of this correction, and we ultimately make a new low. That would be good. But it also could do this, where it turns over to slingshot higher, and we go even higher. So that's why we get to a position of authority. Once we get the hook, get to your position of authority. So what happens? It reverses and pips you out for more profit. Good to go. What am I going to do again when it hooks this next time? I'm going to sell the dollar and expect the euro dollar and pound dollar currencies to bounce. Inverse relationship. Amen? So that's what I'm waiting for there. And on the pound dollar, inverse relationship. I had to close this and did some work over the weekend, but I already have this in ready to trade mode in my live account. And when you shut down your computer or restarts for updates, you got to go back and reset the ready to trade mode. And an expert advisor properties, what do we have here? We have, I want to buy the trigger long. We want to get a trigger long, these little green trigger. We want to get a trigger long, like we did the last time, made hundreds and hundreds of points. And even before that, we made thousands of points off of that move. And we're looking to buy the trigger long, and it's automatically set, so I don't have to do anything. I just don't let my computer go to sleep. You go into power options and say, do not sleep, and then let this baby sit here, and then it'll take the trade for you automatically. How cool is that? And again, once I'm into the long trade and I'm up, I go to a position of authority. What does that mean? I can move my stop loss in a break even +1, which means if this thing rallies and then reverses and goes down, it'll stop me out for a little bit of profit. Or if it bounces hundreds of points, I can take a little something off the table, maybe close one of my lots, lock in some profit. Stop loss automatically moves in profit when you hit your first take profit zone. And then you're in a position of authority. No matter how you push it, it turns a at-risk trade into a no-risk trade. And if this thing does get the cycle up because the dollar index cycles down and this thing goes blasting off to new highs, then we're talking hundreds and hundreds of pips higher. Amen? But I'm looking to buy the pound and I'm looking to buy the euro. Same thing. When that baby PAI hooks, we get a trigger long. We're going to go in like the trigger long here, trigger long back down there. We're going to do the same. So you go into your expert advisor, you tell it what to do. And I go in here, I'm looking for a big bounce, but I'm going to be in a position of authority, and all I want to do is buy the trade trigger long. Don't want to trade trigger short, don't want slingshot long or slingshot short. Any trigger is a good trigger. Position, scalper, optimize, right there. I want to get a trigger long. I already have it set, so now all I got to do is click ready to trade. So Emil, when this baby enters and we start making some pips, what do? We get to a position of authority so that if this daily turns up to slingshot lower again, then we just make some profit and get pipped out for more profit. We look for the next opportunity for a bounce, because up and until we decide the dollar has reversed, then we could flip the script like we did way back here 3 years ago. Go back to the weekly when I changed time frames, it comes off of that. But way back here 3 years ago, I told you then you need to think about buying the euro dollar and the pound dollar, because they're going to go up thousands of pips in a correction. I just don't think this is the top and reversal yet, and this is the end, and we go breaking new lows. Eventually, that is the case, but I still think there's more upside to be had. So that's why I keep buying the dips, buying the dips, buying the dips. And this is another dip opportunity that my weekly's pushing lower, my daily's cycling down, and I'm waiting to buy this based on that daily PAI hook. Get to that position of authority. Amen? All righty. So, what else? Euro dollar, we showed you software, but look at the retracement zone. It's still based on that last move. This is just a simple retracement. Could we go lower? Dollar goes a little higher, this will go a little bit lower. But it doesn't matter in the software scenario, because once the daily PAI hooks and we get a little trigger, it'll enter long. And that's why when it does bounce, like we did multiple other times, bounce, bounce, bounce on these scenarios, we get to that position of authority. In worst case scenario, you get pipped out for more profit. But it could be maybe we do this type of deal where we go breaking out, another retracement, a little three-wave correction, we get another retracement, and we go blasting off again. Amen? So that's what I'm looking to do. Buy this dip, get to a position of authority, and if we go blasting off to new highs, great. We'll make hundreds of pips more yet again. In the midst of our thousands of pips we made way down here when it was at 0.95, when we talked about buying that initially. Amen? So how much higher could we go? Well, we have targets on the screen, 119, 120. If we start breaking out, then we got our 127, 130. We got a lot more theoretically still to come, even though we're 100% correct, getting thousands of pips already. And I still think this is well worth the opportunity of buying this dip when that daily reverses. Even if we just make a few hundred pips, good. And it ends up going lower, well, there'll be a time when is this move over and we're ready to break some new lows, or we still got more upside. Up and until price proves otherwise, I think we still have more upside, as I still think we have more downside on the dollar index. Amen? Inverse relationship. No ifs, no buts, no ands. The dollar goes up, the euro dollar goes down. Dollar index goes down, the euro dollar goes up. And you can see that clearly on the software, right? It's just the inverse. We're at extremes, been engaging higher on extremes, kind of turn. This looks like the inverse of the euro dollar, right? See how this went from oversold, went up slingshot a couple of times, pushing into extremes just like that. Now watch the euro. It's the exact inverse. It went to the downside, it slingshot a couple of times, it's pushing back lower. So when this baby hooks, the other one hooks down and it rallies as the dollar index pushes lower. Pretty simple, but that's the plan. So what do we want to do? Keep that in ready to trade mode. So this is why I use the charting platform, so I can be on. And if not, you can just put two charts back to back. One you can play around with and do technical analysis. The other one you have set and you're ready to trade mode. All righty. What else? The dollar yen, we said the same thing. As it bounces based on the dollar, it would go a little bit higher. We're still at a lower high on the dollar index and dollar yen. I really don't see this going breaking out to just blast off to the stratosphere. That will come later when the dollar finally does bottom to reverse and go breaking above 114, pushing 120, etc., way up there. Then we could talk about this going long and substantially higher. But in the short term, I think the dollar will push lower and this dollar yen will push lower. And again, we're at lower highs here still. So be careful that you're in a position of authority if you're in this bounce. And I'm looking for this to come back down as well. Pound yen, I've been telling you, I'm looking for this thing to go short. And I'm looking for some more downside. I'm in a position of authority on the pound yen, looking for more downside in the coming days, weeks, and months. Where does that come from? That comes from technical analysis, a God-given talent to read and interpret price on a chart. And years ago, those of you that have been with us know this very well. Back during the COVID low over here, I was like, you need to think about going pound yen long because it's going to go up somewhere about 8 to 10,000 pips. It's going to take years, but it would do it. Well, up and until the big not tariff, this was big carry trade unwind in August of 24. We got the bullish move we were looking for. We got exactly what we had anticipated years in advance for this thing to play out. It did it. Now this big bullish impulsive wave down looks like that's corrective. So all of this chopping overlapping, we're still at a lower high, says we more than likely need another push lower, even a new swing point low, before we can look at this thing maybe returning to the upside, or we could get a much bigger push lower. I'm leaning toward a push lower at least to a new low. And what else do we know about the pound yen? Pound yen takes a bloodbath during financial crisis. During the dot-com bubble burst, this thing lost about 38%, which was over 9,000 pips. In the 2007 financial crisis, this thing ended up pushing down about 13,000 pips. So we do know that during markets crashes, this thing, risk aversion, people run to the yen for safe haven. They get out of other currencies and they get toward the yen, the long side. So this typically takes a big spill during a financial crisis. And what have we been talking about for the last hour plus? About eventually we're going to get a blow off top, and then the ES, NASDAQ, Elizabeth, I'm coming to join you, honey, is going to come. And what's it going to be? Is it going to be the credit, commercial real estate bubble that burst? Is it going to be credit card debt bubble that burst? Is it going to be a fiat currency that fails and causes this correction? I don't know what it's going to be, but that's why I'm going to call it. Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford of Sanford and Son. Elizabeth, I'm coming to join you, honey. Here comes the big one. More than likely, during the next financial crisis, as we've seen through other financial crises, this thing likes to take a big spill. So when I looked at this move up, this latest correction, I'm talking few thousand pips for that correction. But if it ties in with Elizabeth, I'm coming to join you, honey, that could turn into multiple thousands of pips coming back down. What if we were just to go from the recent low to the high? We make a 618 retracement, put us around 154. That's 5,000 pips, right? Around that 5,000 pip range. As we're up at 2008, up there, 208. So we just come back to 154, this green box, thousands of pips. And so that's why why I'm more interested in being on the short side at this juncture because as you drill down, this price action is screaming, we need another push lower, my friend. And what does that look like? This could be at least the A. All of that chop and grind is the B wave. And we're looking for the C to come back down to the low and make new lows. So I'm targeting somewhere around that 176, 173, where this arrow is. See it? That's kind of the plan. So what was the plan, Emil? Get into a position of authority. If you get pipped out, get back in. Again, I can't tell you what to do, but this technical picture is screaming pound yen needs to go much lower in the weeks and months to come. If it ties in with Elizabeth, I'm coming to join you, honey, which is kind of pushing out there into the year, first quarter, sometime relatively soon, sooner than later, but no later than later, this technical picture could just accelerate like that. And that wasn't even a financial crisis. All this was a carry trade unwinding that we plummeted from basically 208 down to about 180, thousands of pips. Amen. But this technical picture is screaming, we need a new swing point low. Amen. All righty. So that's why when I get to that, I'm in a position of authority. And then eventually you'll get some big retracements and you can look from the high to low, maybe a 618 out of that. Then we maybe add to our position as we stair step lower and lower and lower. But I'm definitely in it short on the pound yen in a position of authority. So if this thing goes ripping higher, all it'll do is stop me out for more profit and I'll take it every day. All righty, let's continue. What about yellow gold? We'll go to yellow gold next. Black gold first. Is this the end, or we're going to get a little bit more push? I'm not convinced that this initial move is it and we're ready to go tanking just yet. I still would like to see one more push up here toward the Magic Fibo up in this little resistance zone. That would be ideal. What is that? From the high to the low? Guess. 618786 zone. So Emil, was that enough where we tested it and that's the end? Maybe. And is this the beginning of a high, low, lower, high, and we start breaking down? I definitely still think that Black Gold Texas Tea, the Beverly Hillbilly, is going to go dipping down to 52, maybe the upper 40s before we're done. And when we do, I'm going to look for this thing to do a big reversal because drill, baby, drill can't survive on drilling when oil prices are below 60 a barrel. They need prices to be in the 60s to make it worthwhile to drill. And I still think this is going to go dipping, technically speaking. We've been looking for that. Need a new swing point low because of what? Same thing I said a few years ago when we got this swing point low over here in May of 2023, that this price action bounce and overlapping, chopping, grinding, lower highs, overlapping. I stated way back then that be careful on these rallies because we need a new swing point low. We finally got it. And this same price action after that low, we kind of chopped, went higher, got a higher. Then we got another push, then a lower high, another push, lower high, lower high. And eventually we got the lower low. Well, if you zoom in from years ago, the same reason I told you we needed a new low from this low, we're ditto. We're right back in the same type of price action. From this low, we got the same kind of chop, the pop. Then we pull back, we got a lower high. We pull back, we got a lower high. We pull back, still looking for that lower high, ultimately leading us to what? Lower low. So, what am I trading? SCO, inverse relationship. When CL goes down, SCO goes a popping. So as of late, oil prices pop, so this went down. Talked about it over here, nibbled. Got a nice little pop. Now we're getting a little pullback. I'm looking to add to my position, Emil. If we can dip, I got my resting order at 1750. Just missed it the last few times. Went down to like 1768. And over here, 1768, 1774, 61. Just missed it a few times. I'm already in this looking for the pop, a small portion. Now I'm looking to add on a bigger retracement. So I'd love to see oil make a pop toward that magic Fibo and this thing dip down in this zone, add some more of these shares, and then look for the pop. When oil prices go a dropping, Mr. Tucson, down into 52 and 50s and lower, so I definitely think we got a high probability we're going to go to 52, and likely we go to 52, we'll probably push down into the 50s just to do it. And by pushing way down here into 50 and lower, that should send our SCO up a nice little pop. Based on the recent low to a little pop, this thing went from 16 up to 20. You say, well, it's only a $4 move, right? But it's not about, well, I got to make $100 million on a 4 or 5, dollar move. No, I'll take 500, I'll take 100, I'll take 50, I'll take whatever it gives me. But I'm gonna buy. The plan is to have several hundred shares by the time we're done, and get this thing to go up 4, 5, 6, maybe $10. Maybe we get up here into the 25, $27 range. But I'll start taking profits. But that is the plan. Last time we went up to that 24 was when what? Oil prices dipped down at 55. So when oil prices go dipping down to 50, could we get an extension? Maybe. Even if it just gets up here to $20, up to maybe 2022 range right there, 618786, recent high to low, that's still several dollars, and I'll take it. And I'm definitely thinking this is going to go up popping. And if we can start to clear 20 and 22, and we see a candle body close above 22, then we have a 75% chance we're going to go visit in 25, 70 plus we go visit in 27, and we get another one of those type of pops. When oil prices go dipping below 50, this thing will go ripping into the 20s, and that's the plan. Amen? So I'm not convinced that this is the bottom reversal just yet, but I am in it already, expecting this thing is going to pop sooner than later, but no later than later. And if we do get oil prices to rip just a little bit more, again, like to see this go ripping up into this 618786 zone, maybe touch the magic Fibo one more time would be a good thing, and then we can do it. Oh, snap. I like the way they say that. Oh, snap. And there you have it. So, could this thing break down? Yes, it will break down. But do we get the bounce first? I'd like to get the bounce because I'll have that many more shares of SCO for the big drop and the SCO bounce. Okay? All righty. What about Mr. Tesla? Looking at some stocks. Mr. Tesla's winding up, getting ready to go blasting off. Could it go into next year? Maybe. I was thinking we were going to get this rip up here by year end, but Tesla's definitely setting up. We can go over here on our Ninja Trader platform, and Tesla is already, what did it do from the recent high to low? Took out the 618, took out the 786. So what is that screaming Tesla's going to do? 75% chance we go up here to 530, 560, highest of highest probability, and even 650 up there. That is the plan still. So I still think this thing is going to go ripping, whether it's on Optimus, the robots, etc., this, that, the other. I don't bet against him. I go with the flow. So I said way back October of last year that Tesla was going to go on a big run going up to about 500. We missed it by a share, a little, a smidge, I should say, not by a share. Missed it by just a little bit, didn't quite reach 500. But we talked about that in great detail on our replays on demand back in October of 24. We set it right there, October 24 of 24. Expect Tesla to hit 500. Consider the TSLL trade. That's the leveraged Tesla ETF. Said consider it. Can't tell you what to do. It's like I couldn't tell you back on that day in October of 2024. Said Tesla would make a run toward 500. What did Tesla do? It made a run towards 500 right there. And what did TSLL do at that same juncture? It made a run from below $10 up to $41, a big Forex run. I'm still looking for that now. This has not made its run yet. When Tesla starts ripping into the 500, et cetera, maybe we rip to 28, 34. I mean, right now we're only at 21. We start getting this zone. Well, if we start clearing this balance up here, this 28 to 34 range, then it sets the tone to 46, maybe 50. Get another big run on TSLL when Tesla makes its run. What I also like about Tesla, we talked about for many times, is the amount of options that are pushing this thing to be in the 900 range. There are millions of dollars sitting at 900, several millions more in the $700 range. Huge call options, just flat out option premium, millions and millions and millions of dollars sitting out there that somebody's betting big on Tesla ripping into the 5, 6, 7, even as high as 900, 25 million bucks sitting out there. A lot of money in this world to say, yeah, I'm going to buy 900 call options out into 2026 for this thing to go up there. Insane, but that's what's out there. So I still think this thing's going to go a ripping on the chart right now, right, Harold? On the charts right now, we already took out the 618786. We talked about it even during that pullback that we expected this thing was going to go up here toward these extensions at least. And when it does, TSLL would make another run. Well, so far so good. We were down after the big push and the big pullback. We started talking about buying it again around $10. Made a big push to buy it around that $10 range yet again. And what happened? We doubled almost 2.5 times, and we're sitting here chopping. This thing's ready to go blasting off. That's what the plan is to do when Tesla goes ripping to 556, 657. If it can get to that call option out into 2026 and goes toward 900, where do you think this thing's going to be? In the stratosphere. It'll be blowing past these targets. If we get to 900, I see this thing being maybe in $100+ range. Way up here in the 90s. Got it? So I'm not trying to tell you, I guarantee, Mr. Tucson, Tesla's going to hit 900 by year end. No, but some big players out there with a lot of money is putting it on the line to say that they think it's going to go up there. All I can say is I would love to see it do it because my hundreds of shares of TSLL are going to be worth a lot of big bucks. When we got in at $10 and went to 40, that was nice. Took that money and bought new shares at $10 and looking for this thing to go ballistic, and we're already up on the house's money. I like that. And this thing's still got a lot more upside to come. Amen? All righty. So that's what I'm still expecting. And even on the bigger picture, whether you look at this or with the software, we clearly took out the 618786, clearly screaming for us to go up here on our extensions. And that's what's in NinjaTrader as well. We got all of these in there for you. The Fibonacci retracement extensions we use every day are part of your software. You go under drawing tools, you come under MPA Fibonacci retracement extensions, and all that is already pre-programmed for your viewing pleasure. All you got to do is, you can see here, I'll go ahead and take this one off so I can put a new one in there, remove it. You go under your drawing tools, go under Fibonacci retracement, you come up here at the high, you come down to the low, and bingo, there you have it. Automatically done for you. Anybody that has NinjaTrader that has to do their normal Fibonacci's and all, it's a pain to put all the levels and manually light them in and write them in and do and add and go. Well, this is already done for you beautifully. There you have it. I digress, but as you can tell, we're proud of our software. With the only software we've ever released, the only software we've upgraded and enhanced it numerous times, and will continue to do so. But we're not like other services, Emil, where we come out with a new shiny object this week and next week. And no, thou, this is the best thing you need to buy, and this is the best thing, and this is the best thing, and this is the best thing. I said that over 15 plus years ago, as we're celebrating our going on our 16th year of GPA Trading Services, that shiny object syndrome. Come join us. You won't have to need another software ever again. We can navigate you through any financial market crisis or any financial event. And this will be the last software you ever need. And it still holds true today. And I love to see these other outfits that every other day, every other week, they got the newest system, the best this, the best that, and they just keep producing a bunch of garbage, and they keep throwing it out, regurgitating different stuff. Well, this is what we've had, and we've only enhanced it, but it's the same basis. And yes, we've enhanced it numerous times, including the Fibos extensions, Magic Fibo line, etc., but all that's there for your viewing pleasure. And yes, Tesla will go ripping before we get the big Elizabeth, I'm coming to join you, honey, big financial crisis. This thing is due to rip. So that's why we're in it, to win it. And I'm expecting TSLL to go ripping minimum into the 618786 zone and then some. Beautiful extensions that even maybe blast off top where we go much higher. If Tesla starts pushing 7, 8, 900, this thing is going to go blasting off past all of that. Alrighty, there you go. Let's continue. What about gold? We went from black gold, Texas tea, little stocks here. Now we're looking at gold. I warned you about gold. I still don't think this is the end. Still looking for a new swing point low. Why? Because I said so. No, because the software still thinks there's more downside to be had. Still think we're likely going to go pushing down here toward our Magic Fibo. I've been looking for that for some time. Even during this process, I warned you we were going to get a nice correction. We did. I just thought it would come down and touch the Magic Fibo. We had a lot of chopping and all of that crazy price action, and I thought we were likely going to come down. Well, it decided to do the opposite and went on a parabolic move up. And even as we got to these nosebleed sections up here, I said it again, we're due to go down hundreds and hundreds of dollars. Well, we've already exceeded well over $400+ correction like we did over here, and I don't think this is finished. And why is that? Go to the software, and it gives you a big hint on when's a good time to buy the dip. It will go much higher, but when's a good time to buy the dip? And that is right here on a weekly. Got the weekly hook, got the weekly cross, we got the steep slope, we got angle separation. See it? Let me zoom in right there with the big cursor. We got the PAI hook, red, blue, and green hooked. Nice steep slope on the hook. Then we got the trend momentum cross, green below the red. And we see the background is that gray. You see gray between the green and the red. We call that angle separation, like you see over here, on the upside. So we got the PAI hook, trend momentum cross. And everyone can tell you what is a weekly PAI hook, weekly trend momentum cross equal? A daily cycle down. Look at the daily. It's not there. It's not there. Trend momentum's getting close. Red and blue maybe, but look where money flow is. Mr. Tucson, that is telling me that we have a very high probability this is going to continue lower. This will push even lower, lower, push lower, like we're looking for this. Red, blue, green, everybody to get oversold. Trend momentum 1 and 2. We're not quite there. And this isn't finished. So we got a weekly hook and a cross. The daily should cycle. And this daily means the PAI, red, blue, and green. And again, green's not there. And trend momentum 1 is barely there. Trend momentum 2 is not quite finished. So this is why I think there's more downside for the daily to finish that move. Amen? And a beautiful place to buy would be when the daily's oversold and it PAI hooks. And when prices suck down in here into the cloud, and maybe we're pushing with the Magic Fibo there to bounce off of it. Amen? So what can we do with gold? Do what we're doing with the euro dollar and the pound dollar. Come over here to Expert Advisor, Properties. Go in here and tell it to buy the trigger long. Shorts false. So all I want for Christmas is a trigger long. And the only way we're going to get a trigger long is if this baby cycles all the way down, cycles down to get a trigger long. So that's the way it happens. So that's what we're looking for. And we put in our credentials, what we want, how much time frame, stop loss, etc., how much you're willing to, how many lots, whatever. And then you go in here and you click ready to trade mode. And this baby will sit here for days. Maybe it takes into the end of next week. This baby will sit here for days ready to go. And when this is oversold and it hooks up and you get your trigger, it'll buy the trigger. Got it? Any questions? So that's the plan. And that's why I don't think yellow gold is finished and we're ready to go ripping higher just yet. In my humble opinion, we're definitely going to go ripping higher. No ifs, no buts, no ands. But I do think we need more downside. That would be an ideal level for us to drift down toward. And how do I know if it's going to be? Is it going to be 3,500, 3,600, 38, 37? Where's it going to be? Where's the beef? Well, when the daily gets oversold and PAI hooks, I'm going to buy that and look for this to set the tone for the bounce. And what happens when you get the hook, the trigger? You get to your position of authority. So what if this correction comes down, we get in, and it bounces and fizzles and even goes lower? This thing has been on a parabolic move. Look at that thing. Gold at some point is going to come back down to 2,600. No way. Eventually. Could this be the beginning of a much bigger correction? Could. So that's why even when I get the daily to PAI hook, I get to my position of authority. If it does go ripping and breaking out, great. But if I'm in a position of authority and it decides to make a lower high, lower low, and it pips me out for more profit, then I'll take the profit and run and look for my next opportunity where the next support level will be and the next time frame bottom reversal will be to buy that dip. But this latest run, it's been just a psychology of a market cycle. Eventually, we're going to come back down. And if we go with that, we could come back down around 2,000. No way. We'll see. We shall see. But eventually, even if we make a higher low and a higher high, and the punch junk euphoria continues, at some point, you're going to get that parabolic move to come back down into reality. And we're looking for at least a 618 retracement out of that eventually. We may only get a magic Fibo till we go higher. And if that doesn't hold, then we're looking for more of that 618 type of retracement. Amen? All righty. So in the short term, expect more downside on gold. Any rallies, what I said last week and the week before, any rally should be sold because I don't think gold is finished on the correction. Amen? Everybody else is buy gold, buy gold. I'm like, in the short term, no, we want to sell rallies on gold, and then we look for opportunity to get in and add to our position. Because I've been one of the biggest bulls out there on gold. Go back when we talked about this, it's in the archives. It's like Prego, it's in there. When we started reaching 1900, I made a bold statement, not a prediction. I'll leave that for the prophet, that we were going to go down to $1,000 before we reversed and went up to 3,000. Well, we did exactly that, went down to $1,000 area, right? 1,000 something right there, 1,000, whatever that low is, 1,064, 1,052. Like about 1,052 is the low, looking up at that high, low, lower high scenario. 1,074, 1,052, right there, Ian. And we went from 1,000 to what? 3,000, and even bridged on that last push up to 4,000. So yeah, now we're looking for eventually going to get one of those bigger ones, and we're overdue. Look at that parabolic move. Parabolic move, you get a deep retracement. What do we get out of that from that kind of chop and grind? About a 618-ish, between 618, 786. From that low to that high, 618, 786 zone, kind of in the middle of there. Then we went ripping. So is this the one that we don't stop at 3,500? We continue to push toward 2,600? Maybe. Maybe we get it now. All I can say is short term, I want to sell rallies and look for buy the dip when my daily gets oversold. And then get to a position of authority. And if it rallies and makes from the high to the low, we get a 618 retracement, it fails, and then I get pipped out for when it goes lower, then I'll salivate the lower it goes, the more I buy and go back long. Amen? All righty. Warned you about SLV and the silver trade as well. It was due. I first told you it was way under valued compared to gold's big run, that it was going to make a big pop. That goes way back over here when we talked about it, when we got that retracement back during COVID. And I said, man, you need to be buying silver. This is ridiculous. Opportunity for this thing to go ripping. And then we got a 618 retracement out of that. And I kept calling for what, Emil? 35, 41, then some. Bingo. We got them. Took them home. Love it. Now what? Still think there's more upside. Yeah. I still think silver's got way more upside, but the question is, how much more do we go and dip? I would expect at least the daily Magic Fibo. And let me zoom in so you can see where that is. What's the Magic Fibo? That right there, this line, beautiful, gorgeous line, that's the Magic Fibo. So I don't think that this is the end and we're ready to go blasting off. I still think we need more downside. And based on the high to the low, we didn't even get to a 618 to get rejected. And then you do the high, the lower high, lower low. That's starting around 38. 37, 36 area, which Magic Fibo is right in that ballpark, 36.13, 36.96. So I would expect we're likely going to probably see that. So any rally on silver in the short term, in my humble opinion, should be sold. We're going to get a deeper retracement, give us opportunity to get some better pricing, to then shoot for the next big push. And when it starts pushing again, that minimum target, I'll go out to the weekly, show you what that looks like. And that is, I even made a wild statement. We're going to $60, $70 guaranteed. There are no guarantees. What are you talking about? As Justin Wilson would say, I guarantee we're going to 60, 70. But I want to see a bigger correction. What if this parabolic move needs a 618 retracement out of that? Maybe we come back to around 34. We don't hold the Magic Fibo around that 38, 39 range. Then maybe we come back toward that 34 to 30 area. That would be ideal. We can come back down to that level. Amen? So we're looking for a 618 type of retracement over there. And if we get that, then that's even salivate more, because the lower we go, the higher we have to go to get up to this guaranteed target. And this is the tip of the iceberg. If we do what gold's been doing, as I've stated many times, look at the same time frame when gold topped and I made that big anticipated move, everything but a prediction. It was my statement. Amen. I can anticipate with the best of them, my forecast with the best of them, God-given talent. But look at what it's done. 1272, 1618, 272, 2618 pushed into the 3618 and above. Look at silver. We're just now recently made new highs, much less pushing to the 14272, 1618, 272 here, 2618, pushing the 3618. Silver, if it matched gold, should be up somewhere around 150 to 170. That's what gold did, said. Gold's pushing up there. Push the 3618 and above. Silver, if we do the same type of move, puts us up near that 150, 170 target. Now you can see why when I say, Harold, likelihood we go on to 60, 70 is a guarantee. Amen. No guarantees, no buy, sell, hold recommendations. Cannot tell you what to do. I'm not a certified financial planner. It's not my job to tell you what to do. I just simply tell you where I think the markets are headed based on my God-given talent, the software, the technical analysis, and what I'm doing. That's where I'm expecting this to go. And that was set up in this platform ages ago, talking about the initial targets. And now the next targets are going to be that 60, 70. And I do think we're going to get a pullback further before we then reverse. Amen? So short term, sell any rally. Long term, buy the dip and shoot for 60, 70. When we get there, then we start focusing on 70 up here, break that. We start focusing on 90s, 100, break that, maybe 150, 170. Just ping pong between these levels. In the coming years, I do think silver's used in everything. Drones, AI, quantum computers, you name it, jewelry, this, that, and the other. They don't make anything anymore without silver in it, and there is a finite amount of silver out there. Supply and demand says you get a huge, unrelenting demand for something, and you have a limited supply, price is going to go up. And that is the plans, my friend. That is the plan. And finishing up, we started out with Bitcoin to start. Believe it or not, we flipped the script and we started with Bitcoin because Bitcoin did exactly what we said it was likely going to do here. If we didn't go breaking out, we were going to go back and make a new low. And I said, if we dip down and make a new swing point low, we're probably going to go dipping to 100. Look at us. Huh. So I'll just rinse and repeat what I did earlier. You come down and you look at the recent low to high. Look where our 618 sitting, about 94 area. I don't know if that's exact numbers, but it's pretty close. So around that 94 area is where I'm looking for support, 94, 92 area. Kind of this big zone here. So I'm going to move that up. And I'm not trying to tell you we definitely have to get that low, but this should be no lower than this. I'm going to slide that over that way into current price action. So I was expecting us to break to a new swing point low. We did that. Now that we're there, I think we'll probably dip into 100,000. If we dip into 100,000, I think there's a lot of people out there that's going to sell their Bitcoin. And the big dogs will probably force price. I even said it last couple of weeks that I would not be surprised to see the big dogs push Bitcoin to push 100,000 and lower, knowing that's where their stops are, to get them out of the game, to this thing to come down into this zone, maybe 94, quick little dip into here, and then go ripping higher. Amen? So I don't think this is over yet. This could be that bigger A, B, C correction, and we're setting up the big rip. But you need to have a plan. If we don't hold this 618786, then you can see from the recent low to high, it starts bringing us down to that Magic Fibo on a weekly, back into the 70s and 60 range. Ouch. So be careful that if this get down here and it doesn't hold, next stop is the Magic Fibo. And if we can get there on that weekly, I really don't see Bitcoin coming down to 70,000, then reversing going up there. That might be the end of the crypto bull run. Another thing is we're getting close to that end of that 12 to 18 month post halving. We're in it now. So this will probably maybe play out into late year, maybe a little bit into 2026. But I definitely want to see Bitcoin hold that 618 retracement. And that would even be ideal to dip down here real quick, reverse and go up, and then end up with a big splashy 5-wave impulsive move that could push us up into the stratosphere, into that maybe 180 target. We get that pullback to 618, that sets the tone, maybe extending it toward the upper end of our target up here. We've been calling for 150, 170 for several years now, ever since the halving, ever since 2022, actually, when Bitcoin was below 20,000. And I kept saying for weeks and weeks while it was below 20,000, man, this is an opportunity of a lifetime. This is a steal of a deal. You're almost committing a crime to be able to buy Bitcoin at below 20,000, that it was going to go ripping into the 100s, and the target was 150, 170. It's possible I was shy on that by maybe, 20, less than 20, 126, whatever that top was, around 128. What is that high? 126. Yeah, looks like about 126. So I would have been 36, 46, 20, less than 25,000 shy when it was down below 20,000. That's still quite the move. Well, I'm not trying to tell you it's over. I warned you about this. So you want to see this support zone hold and we bounce. Then when do we get extremely bullish? Watch this maneuver. We're going to get extremely bullish, Emil, when we get the high, we get whatever the low is. Maybe it comes down toward that 95, this big support zone. We don't have to go that low, right? We can say this could be the end. I still think we're going to dip into 100,000 to hit, oh, snap again. Must be a lot of people on that platform. Oh, snap. I still like that. So if we dip into 100 and we get the exaggerated move lower because people are bailing, selling their Bitcoin, sell, 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 because they hit their stop losses, then this could give an over exaggerated dip down in here. But I'd like to see that hold. And let's just say we do get to 95, for example. We hit the 100,000 and people freak out, and then we get a big over exaggerated dip down in here, and then we hold and we go reversing. Whenever we start breaking above that 618, so from that high to whatever the low is, we start breaking back above the 618 to the upside, it sets the tone for us to go blasting off. Especially with the pullback all the way toward that 618, that sets up a massive blast off, which would push us into the 150, 170, and I'd even start targeting maybe 180. So what am I trying to tell you? This damn well better hold down here and then go blasting off. And if it does, and we start to see an impulsive type of move, then I'm going to be pushing not only the 150, the 170, I'll probably be even pushing up here toward that 180. Got it? So this is healthy price action, believe it or not. Ripley's, believe it or not, after that run, after that big run, a 618 retracement sets up the next big move. So in closing, probably going to see a dip below 100,000 just to freak people out, hit stop losses, and the big dogs are laughing, going, I got way more money than you guys can handle it. So you know you want to lock in your profits. You bought it down here at below 20. You don't want to see it go any lower than 100. So let's sell all the Bitcoin so they can come in and engulf all of that and then push this thing to go ripping again. I gave you a warning sign when I saw that top in this 618 retracement. We're likely going to get another push. We did that. Now what? This better well hold. We start breaking below that, the doors ajar to go much lower, and that probably signals this is the end of the Bitcoin bull run, and we'll look to buy the dip again, and then we'll look for the next push with the halving in 2028, start the cycle all over again. Amen? But I won't call this the end yet. This holds, we bounce off of that, we get a high, we get a low, and how we break above that 618 in a bullish type of move, game on. Still going to our original targets. That is the plan. So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. And join us again tomorrow. That's it, and that's all. We'll see you tomorrow.